we could have a bearish day today though. We also saw the red zone work yesterday. And today I'm like, what was that? Fucking red zone just worked. It didn't stand on top of it and bash it down 12 times from above. Doesn't mean it can't though, because look what we have at the bottom is the red zone all the way at the bottom, you know. So coming down to smash that around is also acceptable. A profitable stop at the extreme, because then you can handle an 88% retracement. We had a 94% retracement the other day. We know it can do that, and to be able to handle all retracements, like at the end of the day, just at any move, not particularly this one, do your chances go up if you can handle all retracements and it's only extremes that can knock you out? Because at the end of the day, everybody else is contained within the retracements and they grab all their stops, but not yours. Just a 61 in most cases. They really gave us to hold the short from the top today. I wish I got it on the Russell and the Dow and the SPY. They're moving harder. That's what I thought this morning. I was like, well, it's very likely that we're gonna get downwards. The ATR is not too bad. What is it? 18. Doable, sure. I didn't like that so far. So now we're on the top of the old red zone, which is beautiful. There used to be a little B point right in here as well. The top of the old red zone. Now where's the 61 of the whole push? Are we at it also? Oh no, we denied it, neglected. What if we go to the 127 and come all the way back? I'll never forget that now. It means that we go to that range down below. So now we're in that green zone that I was talking about in the morning. Basically, this is the other side of the range. The low of yesterday. Curious if there was any other kind of green zone. The big 300 point range. This is literally the green zone to the big 300 point range. So the red zone led to the green zone. And on the other chart, we have to get awareness of where the 127 is. Through it now. This level, it is an interesting one though. It used to be a 61. The 127 might get tested from the underside though. I can see the consistency of the candles have changed. There is a 261 that goes along with the bigger fib set there as well. Name of the game is to keep the exposure tomorrow's report. If you can find a hedge against it, then that's great. So we're coming back to test the 127 from the underside. Make sure that it's safe. So you can see the move was just to get back to the 127. The thing is like I'm in, but the candles are a lot bigger than what they're used to being, so you have to take that in consideration as well. Like we can take off a lot of profit really soon into the trade and then hold the rest of it, and it's not so risky. The question becomes like, how much do you need to make it safe? Like, can we take it up to the small short-term B points and be safe enough in these small candles here, or do you need it to make like some huge move? If we can take a small short-term trade and let the rest of it run, then looking all right. Today was definitely a bearish day. That was clear.
Hey, John.
Mm-hmm.
Why was the bearish day clear?
Well, first off,
well, I mean, we can say that now, but why were you thinking bearish right off the hop in the morning?
Well, as soon as it opened, we were at a pre-market high, and I knew I could get short-term exposure to a longer-term retracement. The daily was one of the major factors. Having come back into this node up here, I know that we were overextending ourselves in the short term. We had the need to come back to this little B point too. We are at that B point now as well. So, you know, this is the whole idea of making the right shoulder, getting exposure for that right shoulder, even if it's just a tiny little move like this one here. Because it is this movement right here now, and we're in that node right now, and I saw that we were extended past the high of the node. We wanted to come back into the middle. There were other variables too, like the red zone leading to the green zone. The way that it was moving right off the bat, I could tell that, you know, they were trying to steal everybody's stop right at the open as well. The open was the time where the reversal was. They wanted to get that going before everyone was ready for it, and I could see that. We were over the top of the red zone on this chart over here, and I could see that everything was wicks and spikes out of it. I knew that we were using that red zone really well yesterday. Ultimately, I knew that they were fighting fighting for the short. Yesterday was very much of a, a grind for people that were short. And today they would have given up. I think a lot of them. So it was a good situation to start looking at this range actually being able to be used. Because yesterday they didn't use the range once properly. Like it was always, red zone or middle, red zone or middle, and they never gave the green zone. Today was the day that they gave that green zone. So the allure of it making a large movement specifically to use this range, yeah, making this movement here in a different way, we're in for. This specific area here, an intriguing area. We're almost halfway back into the move right now. Like the 50 is here. The 61 is what I was looking for, but funny enough, if the 61 was a little bit cut short, it wouldn't surprise me. I was also looking at that. You know that, remember yesterday and the day before we were getting these kind of like really tight nodes? They were very, very similar. It's funny to me to see that, this is the same distance in range as what we have at the top up here. Like they're the same range. Except it didn't use this one. The other chart's middle of the range. Green zone, red zone. Right smack dab in the middle of the gray zone. The middle of the range.
Still go up, or is it gonna go first down?
I think that it's one of those days where we have 80% of the day going down, and then at the end of it, we find ourselves going up to the middle, maybe a little bit higher than the middle.